Hey guys, I'm here today with Scott McGrath, the founder of Nexus Advisor. We're going to talk about a nice strategy that I've been talking over a few times now. So welcome, Scott.
Thank you for the invite. I really appreciate it.
Yeah. So tell me a little bit about that trust, that special trust. What is it? What's the pros and the cons for that?
Yeah, I'd love to. So it's not your average plain vanilla trust. When you call up an attorney, 99, not 98, but 99% of attorneys will sell you either a revocable or a living trust.
Uh-huh.
But just understand those trusts have zero benefits. Zero. The only benefit is you bypass probate, but it's not you, it's your assets. So the only benefit really was for your heirs. So you lived your whole life with the trust but got no benefit. So our customers, we show them a different trust where this trust gives them control of their assets, control of their taxes, control of everything. You literally control if the money gets taxed or not. And we can show you how this trust works. It's been around for almost 500 years.
Cool.
And when they wrote the Constitution itself, it protected this type of contract in Article 1 of the Constitution. So um, I can walk you through all that, someday or sometime. But yeah, so it's an amazing trust. Gives you what we call the five controls that you have to have if you're an investor or you own a business.
Okay. What are those five controls?
Okay, cool. So first is asset control. In other words, think about this. If someone comes and sues you and the court takes the asset from you, you really did not have control of the asset. You managed it, you had management, but not control. So our clients, our customers, they have really high expectations for me as a financial planner. And so they have high expectations. They expect me to show them a program where they actually can control the asset, not the court. You don't want the court controlling your assets. And so when you get a trust like we have, you're literally taking the power away from the court. And if you make me a co host, I'll be able to share my screen and show you something really cool. I think you'll like it.
Yeah.
Um, but there's sometimes when I'm talking about it, we do three things. We show case law, we show contract law, and we show tax code. Those are the three things we focus on. But
You
if I can,
you you are able to share.
okay, cool. So watch this real quick, because when people say asset protection, it's not true asset protection that most people they say they give you asset protection, but it's not true asset protection. But look how our trust is true asset protection. Now this is a court case, Burns versus Miller. You can look it up. Look right here. A trial court ordered to turn over property. Remember I said you don't control it, the courts can control it.
Yep.
Well, the court came to take the property. Look right here, but the appellate court said, "Wait a minute, no, no, no. This property is property of a spendthrift trust. It's an irrevocable spendthrift trust, not a revocable spendthrift trust." And look right here, the property code says the property in this court case is exempt property under the turnover statute. So so
That's
the
huge.
courts themselves say, "Hey, you can't touch these assets. These assets are exempt from turnovers." And in any court in the United States, however many courts there are in the United States, no court, not even the Supreme Court, can turn over assets, okay, if the properties are considered exempt by the court. And that's a very powerful, powerful thing to
What's
when you put your assets in for them to be exempt from turnover.
There's a lot of people that thinks that to have the best asset protection, you need like a bridge trust, some kind of offshore control. Uh,
Mhm.
with this, is that correct to think that we don't need that no more?
Yeah, and you don't need that ever again. So what people don't understand is that the best structures on the planet are right here in the United States if you know what they are. You never have to go to the Cook Islands, you never have to go to Belize, you never have to go somewhere else because all they're going to do is throw hoops at you to jump through. Okay? If you go to those other islands or whatever, you're going to have to jump through hoops the rest of your life. You don't have to jump through any hoops. The only hoop you jump through is getting set up on the right trust, a trust that again it's been around for 500 years. The Rockefellers, these are the types of families that use these types of trusts. where you have control. And in fact, John Rockefeller said, "Own nothing." See, the trick is not being the owner. Okay, I'm
Exactly.
actually um, currently writing a book about ownership is not your friend. And so
That's funny.
everyone wants to be the owner. They think there's power in being the owner, but there's really
Yeah, it's just
ownership
good.
actually is the problem.
It's just good for your ego. But if you don't own anything, but you control everything, that's
Yeah,
the key, I think. Yeah.
that's the key. That's the key. Because guess what? When you die, you can't take it with you anyway, right?
That's true. That's perfectly true. So, what is the three other component of the trust? Not the component, but
So it's the control. So five
yeah.
controls. The first is asset control. The
Yep.
second one is privacy control. The
Okay.
third one is tax control. Okay. The fifth one is liability control. See, I want to control if someone has the right to sue me or not. Most people cannot control if someone's going to sue them. But I
Okay.
get to control if they're going to sue me. And then the last one is called peace of mind, so or mind control. You have to be able to control your own peace. Okay. And if you don't control your own peace, you're not going to sleep well at night. So we
That's
teach
true.
these five different types of control and how you can master all five of them.
Okay. Let's talk about tax control.
Okay. Yeah, that's the number
This
one.
one, yeah, exactly. This one has a lot of traction those days.
Yeah,
Yeah,
yeah. So what instead of focusing on the tax side, what I do is focus on profit. Because here's why. If say your business makes $1 million and say 500,000 is actual profit, okay, you're going to get taxed on 500,000. Why? Because that was your profit. What I do is show you how to move profits into the trust so it's not taxed anymore. Because the IRS, here's a secret about the IRS. They do not tax people and they do not tax money. Okay. They only tax income. So think about it. There's $100 bill lying on the ground. They're not going to run over there and tax that $100 bill because they don't tax money. Okay.
exactly.
And they don't tax people. Why? Because a third of the United States pays zero income tax. So that proves right there they don't tax people. They're only taxing income. Okay. So what I do is teach you how to control if you're taxed because you get to control what income is. See, if I control what income is, I control if the IRS can tax me.
That's powerful. That's really powerful. And what's the mechanism? Let's say I'm a surgeon, I have some real estate, but
Mhm.
everything is on my own name.
Right.
What's the do I have to sell everything to my trust? What's the process? And
Yeah.
there some tax trigger, or if I move
Right.
my stuff
So
from
70% of all physicians own their practice, but 30% they actually work for other people. And so they're getting usually W-2 income. They work for a hospital or something like that. But those 30% are getting W-2 income, and they can't change their taxes really. Okay. But the 70% of physicians, if they own the practice, they can change their tax situation. Why? Because they can go back from being an S corp and go back to being an LLC or a C corp. So if you can control your company, your structure, you get to control everything. So, and we show you how to. We do what's called corporate structuring. We show you how to change the corporate structure so you maximize your profit.
okay. But I was more thinking about, let's say I own a real estate personally,
Yep.
and I want to transfer that to the trust.
Right.
Is there a sale trigger, or is there something, or
Yep.
it's tax free to do the change?
So the only way to transfer assets into the right type of trust is using a bill of sale. Why? Because you have to create a contract. You need what's called contractual protection in there. Okay.
Okay.
So you need to create a contract. You never want to gift or give or grant. You don't want to have a grant or trust. So if think about it, if I set up a non-grant or trust, but then I gift an asset into the trust, I just created a grant or trust. Even though it was a non-grantor trust, I now made it a grantor trust, which there are no tax advantages in grantor trusts.
Okay.
So you never want to gift the asset into a trust because you're going to create a grantor trust that has zero tax advantage. So what do? We sell it to the trust. That creates a contract. And the contract, the trust now owes you the money for that asset. And now you do not have a grantor trust in that situation.
Oh, that's nice. Same thing for an LLC to the trust. Let's say I own the real estate in an LLC. It's going
Yeah,
to
if
be
you
the
own the
same
real estate in
process.
LLC, what we want to do, remember when you sell to a trust, the trust is going to owe you all that money, right? So we don't want the money being owed to an LLC. We want the money being owed to us. So what do I have to do? I have to quit claim deed the asset back to me, and then I sell it to the trust.
Is there a tax involved, or do I get tax when I
Usually
do that?
not. No, usually not, because you're going to quit claim deed it back to yourself, but at your basis though. Okay.
Ah,
We're
okay.
not going to sell it to the trust at a capital gain, usually.
Okay.
Because that you have a this is not a personal sale, this is a contract sale. In a contract sale, the contract gets to stipulate the price, not the government. Okay.
Nice. Nice. And let's talk about, let's say I have my trust. You did it, and we went over all the paperwork to do it correctly.
Hmm.
Uh, how can I get paid from the trust? What's the, let's say we were talking about I can buy houses,
Hmm.
a flight ticket to go to convention and anything, but what's the global idea, how to get paid after and how to avoid capital gain later on, if I don't need a lot of money to, because everything's going to be paid by the trust, but how's the idea behind that?
Yeah. Um, Usually most of my clients have two trusts, one for their assets, one for their business.
Okay.
And each trust manages the business trust manages business affairs, but the asset trust manages the assets. And so remember, the minute you sell everything to your asset trust, your family trust, the trust owes you this huge debt. It's a note payable in the bookkeeping, right? So the trust, my if I sold 10 million to my trust, which I have, and that trust now owes me 10 million bucks. So let's say I want money for food or fun or fashion, or I want to go to the casino, right? Those are not trust expenses, but it doesn't
Exactly.
matter. I can pull money out of my trust right back to my bank account because the trust owes me the 10 million because I just sold everything into the trust. So,
Wow.
and we show you how these complexities work, but they're actually really simple when you look at them. They're not
Yeah.
complicated.
Nice. I really like that. So and that's why I want to share with everyone. And what's the minimum investment? Let's say, what's the minimum return, or what's the threshold to be to be effective, to be a good starting point to use your
Most
service?
people that buy our trust, they do it because they want to not have such a big tax burden. Okay. And so let's say they're paying 50,000 a year in tax. But if my trust costs about 30,000 to set up total, they don't mind paying 30,000 because paying 30, they're actually going to net the other 20,000 back that they were going to give to the IRS. You see? So people always say, what's the cost? What's the cost? There's actually no cost. Why? Because the money you give me was money you were about to send out to the IRS anyway. You were going to lose the money anyway. So why do you see it as a cost to set up a trust? Okay, if you were going to lose the money to the IRS, we show you how to redirect the money and set up what we call
Different
your
way.
legacy.
Nice. I really like that, man. That's why I needed to have on board here with the podcast, because it's so awesome, and I know we're gonna work together. But look, any other thing that you might think that we can share with our
Yeah.
audition?
I would say never let the tax tail wag the dog. Okay. Most people let the tax tail wag the dog. You don't let the IRS tell you what you have to pay in tax. If you set up the right trust, you will control what is taxed and what's not taxed. And you want to be able to control if or when the IRS is going to get money. Okay.
Whoa, that's huge. That is really huge. And I know we talked last weekend when we met. Let's say if someone wants to put like a life insurance, like own bank own life insurance strategy or infinite banking, whatever you
Right,
call
right.
it, what will be the benefit to that in that type of trust?
There's a 5, 10 different ways to structure that. You can let the trust own it, or you can own the policy. But whoever owns it is the one that needs to be paying for the policy normally. Okay, so there's different ways to structure that, and so I even have some clients that will pay for the policy out of the demand note. Okay. So when they die, the money goes to their kids and it's not necessarily a trust asset. But think about this for a second. If I let my trust pay the policy, my trust is bringing in millions of dollars without the tax burden. So guess how much of a bigger policy my trust can buy? See, if I paid for the
Yeah,
policy, think about it. You got to pay tax on the money that pays for the policy. So I don't want to pay for the policy. I want my trust to pay for the policy because
exactly.
now my life insurance is 30% bigger now, right?
Wow, that's huge. I really like that, but that's gonna be for another time. But
Yeah, that'll take about an hour to explain that. So
yeah, but let's do it. So look, Scott, I'll put my code here, and everyone who wants to work with me to set up a trust with Scott, I'll give you a good discount. So thank you, Scott, again. I'll see you tonight in New York at the event.
look
And
forward to it.
yeah, cool.